Second start.
Start.
Sir, you can start, suppose.
Yeah. Good evening to all the members who are registered and participating in this webinar on the topic of GST Departmental Audit, Legal and Practical Aspects in this two-day refresher course on GST. So for addressing this second day session, we have CA Ganesh Prabhu Balakumar. He's from Chennai. Friends, yesterday we had our speaker CA V Shankar Narayanan. He is also from Chennai, and yesterday's talk was on closure of financial year 21-22, GST precaution pointers. I'm sure the members who participated would have learned a lot of additional points and a lot of takeaways from yesterday's talk. So today's session speaker, we have Ganesh Prabhu Balakumar. I welcome CA Ganesh Prabhu Balakumar for this webinar. Good evening, sir. So I also welcome all the members who have registered and participating in this webinar. Before I hand over the proceedings to CA Ganesh, it's my privilege to briefly introduce him to the gathering for this evening. CA Ganesh Prabhu Balakumar is a CA based out of Chennai and is in practice. He's basically a commerce graduate from University of Madras. He's a master in financial management of Pondicherry University, and he's also a law graduate from Karnataka State Law University. He's a DISA and is also a certified member from the Institute on Indirect Taxes. As a partner in the firm of C. Ramsamy and B. Srinivasan, he's a specialist in indirect taxes and has more than a decade in heading the GST and indirect tax department, compliance advisory and litigation vertical of his firm. He's been representing various cases before the Customs, Excise, Service Tax Appellate Tribunal, Sales Tax Appellate Tribunal, Commissionerate, and other adjudicating authorities of GST and indirect taxes. He was involved in GST implementation of various organizations and advising clients of various verticals such as manufacturing, construction, entertainment, real estate, retail trade, automobile industry, education institutions, to name a few. And as a faculty, he's been a faculty member of various reputed organizations and is extensively toured various parts of South India, giving guest lectures for various institutions on the topic of GST, and is also master trainer of GST of the institute, and is trained more than 10,000 CAs and 25,000 students, and has addressed various organizations at on the topic of GST at CII, FICCI, MMA, KMA, various other chambers of commerce and professional institutes like CA, CS, and CMA, and is a member of GST study group of the institute. He's presented papers and is addressed the National Academy of Customs and Direct Taxes and Narcotics, CGST department, SGST department, Regional Training Institute, and various government officials also is trained. He's a resource person of initiative of Government of India, which is called ICT Academy. He's a visiting faculty at Loyola Institute of Business Administration, and is a member of the Governing Council and was immediate Vice President of International Chamber of Indirect Tax Professional, which is an association dedicated exclusively for indirect taxes, and is a regular writer on various articles in reputed financial dailies and magazines, participated in various shows and debates in various television programs, and he's also an award first prize winner an All India 5th quiz competition for ICAI students conducted by ICAI while he was a CA student. With this very brief profile, I invite CA Ganesh Prabhu Balakumar to address the members on the topic of GST departmental audit, legal and practical aspects. So in fact, of late, I'm sure a lot of members would have got GST audit notices to all their clients. I'm sure all of us are busy with that, and also with 28th being cut-off date. So that's again another area where all of our members would be very busy. I'm sure CA Ganesh, Prabhu Balakumar would enlighten us as to how we go about, and I'm sure this session would be very enriching to each one of you. Over to CA Ganesh.
Thank you, Naresh Chandragili, sir, Secretary of SIRC of ICAI, all the members, learned members, friends, who are all virtually present in times of the busy schedule that we are on in connection with the annual compliances of GST. Though it is always said the GST audit has been taken away, understanding the annual compliances and return under GST, it's an art by itself. Coming back here, getting into today's discussion more precisely on GST departmental audit. As very rightly shared by our Secretary of SIRC, the notices in connection with departmental audit is being started to be issued, and a few audits have been kicked off, and we started to receive audit objections in connection with it, and also the show cause notice associated post conduct of all these audits. Today in our presentation, we'll understand what is the GST departmental audit, which is conducted under section 65 of the CGST Act, followed by what is the modus operandi. Are there any timeline associated with the conduct of this audit? Within any time frame, they need to complete the audit, and what is going to be the outcome of these audit? And just to make a anecdote, how it is different from some of the old audits that we have under the erstwhile pre-GST regime, plus common checkpoints in GST departmental audit. Of late, maybe hand-holding some of our clients and the various other associates where we are taxpayers, where we are involved in it, I could able to come up and share about top 25 departmental points in connection with GST. Or all this would be packaged. Try to package all this in the next maybe 120 minutes or so to make our initial discussions in connection with GST departmental audit. On the background, to start with, on all those aspects in connection with the legacy regime, or to put it in this way, under the indirect tax regime, for the first time during pre-GST era, the departmental audit, all that started with the Central Excise Audit 2000. There was the Canadian model of audit. Same was brought down to the Central Excise Act, and a very famous audit which used to be happening based on the turnover as a criterion. And later, the tax paid was brought in as a criterion. Based on the taxes paid by the assessee, a periodical audit used to be conducted in connection with both Central Excise and Service Tax regime. And I'm sure a lot of our members would be aware of all these audits which used to be conducted under the Central Excise and Service Tax regime. And more precisely, under Service Tax regime, we had a lot of decisions which before the Delhi High Court, where a lot of assessees went before the High Courts and stayed the conduct of departmental audit, saying that the department officer does not have a power to conduct audit. To ensure all this old legacy matters are all being put to an end, under Chapter 13 of the CGST Act, precisely a section is getting inserted. Section 65 of the CGST Act comes out and gives powers to an officer who is appointed by the commissioner to come and conduct an audit. Very interesting to note, section 2 subsection 13 defines the term what is audit. Section 2 subsection 13 very precisely comes out and defines that audit means it includes the examination of records, returns filed, documents that are maintained or furnished by the registered person. Similarly, during the audit, the officer would have all powers to verify the correctness of the turnover declared, taxes paid by the registered person, refund claimed by the registered person, input tax credit availed by the registered person. To put it in a different way, a complete examination of record, returns, and various other documents in connection with turnover, taxes paid, refund, and ITC would be the sum and substance of predominant of the departmental audit. And to come out of all these old challenges that the department was facing, to put an end to some of those challenges of them, they ensured a precise word called as audit is being defined under GST, and the power to do the audit is brought in through the sections of the act. Coming back here, chapter 13 of the CGST Act just has two provisions, just simply has two provisions. One, which discuss about section 65 of the CGST Act, which talks largely about the departmental audit which has been conducted on the premises of the assessee by an officer who is authorized by the commissioner to go and do or go and conduct the office in the place of business of the respective registered person. Yet another audit is being there, which is very popularly called as section 66 audit. It would be applicable only on certain specified circumstances where the commissioner, where the assistant commissioner, after the approval of the commissioner, would appoint a chartered accountant and the whole audit would be conducted. Coming back here, getting into more focusedly on section 65, the departmental audit conducted by the departmental officer. Basically, every jurisdiction is having a audit wing. Apart from the investigation department, apart from the regular jurisdiction department, every CGST departments below CGST, every divisions, every commissionerate, they exclusively have an audit commissionerate whose purpose is only to conduct departmental audit on various taxpayers in the location which is allotted to them. Now, this audit commissionerate, which is basically headed by a additional commissioner or commissioner as the case may be, this audit commissionerates where they go and conduct audit on selected tax assessees, not on all taxpayers. A selection criterion is based on many factors, including factors in connection with the quantum of ITC claimed by the registered person, the quantum of refund claimed by the person, followed by the amount of ITC not reflected in the return, the quantum of taxes paid by the registered person. A variety of criterions internally, risk-based criterions are identified by the department and the assessees are all selected. Once all these assessees are selected by the department, they are distributed among the respective audit commissionerates, and the audit commissionerate has various circles or wings below them to whom the audits are allocated. At times, the group consists of two superintendents and one inspector. At times, the group consists of 3 inspectors and 2 superintendents or any combination of it based on the risk profile of the assessee. There are circumstances where 3 people from the department visited the assessee premises and conducted audit. There are circumstances where 5 people from the department visited the premises of the assessee and conducted the audit, and it purely depends upon the risk profile of the assessee. And how this risk profile is crystallized is by and large based on various parameters which I have listed earlier. Before conducting the audit, as part of the procedural discussion, a formal intimation is made to the respective assessee for conduct of an audit. A formal intimation or a notice is sent to the respective assessee, and this notice lists down who is going to be the person who is going to conduct the departmental audit, followed by for the period for which the audit is going to be conducted, and what are the documents that are going to be called for or required for conduct of this audit. Upon receipt of this notice, it becomes the responsibility of the respective taxpayer to ensure the said notice is responded within a reasonable time, which basically mentioned in the notice, or maximum of 15 days, and ensure the necessary documents are submitted to the audit party. Once the necessary documents are submitted to the departmental tax officer who is going to come and do the departmental audit, once the documents are submitted, internally a small verification based on the documents submitted are done by the officer, and then the physical visit happens. Now coming back here, usually the model is like this, where upon receipt of a notice called as precise notice called as form ADT1, upon receipt of this ADT1, in response to ADT1, all the necessary documents that are called for would be submitted. Usually the documents used to be the financial statements or trial balances or the state-wise financial statements are called for, apart from the inward supply ITC register, plus the top 5 goods details, top 5 services which are provided as output, those details, with various other workings in connection with reverse charge, reconciliation of the financial statements with form GSTR 99C, and the annual return file. These documents plus certain specific documents which are applicable to the respective assessees are also called for, in case if it is going to be a principal who was involved in job work activities, those related connected documents are also called for. Upon submission of all these documents with the jurisdiction, with the audit person, a physical visit to the place of business or the office where they are conducting the business, to that usually happens, where a various verification of documents will be done. Often a doubt would be there. This audit would be conducted for what period? Because at times notices are issued middle of a year, or notices are issued after immediately once a financial year is getting completed. It's very clearly now provided for that the audit can be conducted for a financial year or even part of a financial year or even for multiple financial years. Usually now we get notices for a period of 17-18, 18-19 and 19-20. For all these three periods together, a notice is issued in form GST ADT 01 for conducting the departmental audit, where the proper officer who is authorized to conduct the audit, basically the person who is authorized by the commissioner, and where his name, mobile number, all the basic information, mail ID, where the details in case of soft copy or certain reconciliations are going to be shared, all that would be form part of the form GST ADT 1. And if it is issued from the central government, no doubt the DIN number is all, document identification number, DIN number is also being available on all these documents. The proper officer who is authorized to conduct the audit on receipt of all these documents usually take a shorter time to do a small desk review of all these documents, verify the documents, frames of opinion about the procedural compliance, the periodical aspects of the assessee, and then comes for a physical conducting of audit. While they conduct the audit, they usually verify the books of accounts which are maintained by the respective registered person. They also ensure the correctness of the turnover in connection with the turnover in connection with which is reported by the assessee, whether the turnover reported is matching with the financial statement. In case if the assessee has claimed any exemptions, there are a variety of exemptions. More precisely, for goods and services, we have about 196 goods plus are getting exempted, 134 plus services are getting exempted. Are these goods and services which are claimed as exemption by the assessee is in line with the exemption which are allowed as per the law? The rate of tax applicable for the said products and the issues in connection with input tax credit, refund, all these are all going to be verified as part of the GST departmental audit. As this is the model that is going to be opted in connection with the audit, maybe on each of these aspects, they may get convinced at certain point in time, or that would be they may be probing into certain other areas in connection with issues. Just to highlight one or two few examples, there are organizations who have this habit of accounting for revenue recognition as per their service industries model. They would have incurred a few expenditure during the financial year, but the revenue of these expenditure would be accrue and arise during subsequent financial years. But as part of principles of revenue recognition, they have to recognize revenue in the books of accounts, which would be a reconciliation item between the annual return or the form GSTR 3B or 1, the periodical return, vis-a-vis the books of accounts. When we go back to the books of accounts, the books of accounts would have a different number, and naturally the annual return or the 3B or 1 would have a different number. In these circumstances, a little detailed review need to be done. Is it the time of supply is triggering in this period itself, or the time of supply triggers at a later point in time, very precisely in case of few contracts on construction related matters, these points becomes little exemption as part of accounting requirements. Similarly, one of the assets claimed exemption for a services provided to government, where the assessee is involved in laying of pipes and tubes for a metro water department. Apart from this, he also does the activity of same laying of pipes and tubes for certain commercial organization. For the commercial organization, the necessary GST was discharged under the works contract category. However, when it comes to the said activity, which laying of pipes and tubes to the metro water department, it is such a unique contract where the pipe and tube will be provided by the department, the water board department, metro water department, whereas this supplier is just going to merely do a service of laying of those pipes and tubes. Given a contract, the assessee was on the forefront, and assessee was on the thought that it would be exempted. However, department took a different thought. The activity is works contract, predominant element is material, and you are not entitled for the said exemptions. So matters can go this way, that way, based on the facts of the respective assessees. So a verification, a detailed verification of those aspects, followed by a clean understanding of the rate of tax. What would be the rate of tax applicable for the goods or services, whether it has been discharged correctly or not? For example, though there was a change in the rate of tax for few assessees, the assessee was not aware of the changes in the rate of tax. They were thinking it little differently, and they were charging at a lower rate as compared to a higher rate. As per the provisions of the law, until October 2018, they should have charged for their product GST at the rate of 28%. However, they have been charging on those transactions alone, only on those identified on the 1,600 transactions that they have done during the month. About 18 transactions was identified whether it would be liable, to tax or not. A point to be noted down over here is whether the eligibility, these transactions are liable to GST at 18%, or these transactions are liable to GST at 28%, was a very clear doubt. In connection with this, when we go back and analyze, a few transactions are liable to GST at a higher rate. Matters of these nature can be brought in as part of these departmental audit, including the never-ending debate on input tax credit and refund. Let me reserve those areas for exclusive discussion on few important departmental audit paras or queries which are all raised for those discussions. But by and large, the model of verification or the model on which they review is compartmentalized into from the outward supply taxes perspective, from the input tax credit perspective, from the reverse charge perspective, from the refunds perspective, if in case they have opted or claimed for refund, followed by on any other matter of significance, relevance. Broadly, by and large, these are all the areas that are all looked into. And here, post submission of document and initiation of audit, the audit has to be completed within a period of 3 months from the date of commencement. The day in which they start conducting the audit by way of getting into the premises of the assessee and doing it, from that day within 3 months, the audit has to be completed. Exceptionally, if the matter or the audit is so tricky, it involves various other requirements and other challenges, maybe it can be extended for another 6 months, that too with a prior approval of the commissioner. On reasons recorded in writing, maybe an additional extension of another 3 months can be granted for conducting the audit. As part of the responsibility on account of the taxpayer or assessee, whatever details that are called for, whatever documents that are required by the proper officer or the GST officer, the registered person shall submit or give all those documents which are required. Failing which amounts to offense, which is also punishable for a general penalty as well. Coming back here, once all these documents are all given, a physical verification of the audit is conducted by the department. A doubt comes, is that is all the audit? No. Once all these physical verification by the officer is done, post examination of records, post verification of return, they come up with a observation, very popularly called as the audit objections or audit paras raised by the GST departmental audit. At times 15 paras are raised, at times 10 paras are raised, at times 5 paras are raised, at times 3 paras are raised. It's based on the assessee's validity, creditness, the doubts that they have. Coming back here, for each audit para or audit objection raised by the officer, assessee would be given an opportunity of advocating himself in connection with reasons as to why the said findings of the GST departmental auditor would be wrong, not proper, or not in synonymous with the law. Let me repeat it. A lot of challenges that would happen over here when we get into some of the common audit objections, which are as part of departmental audit, that when we share, maybe we will all have a very close understanding, would be that these are all common points when we start discuss when we are on these GST department or audit on a regular basis, we would come across that yes, these question becomes very common in connection with all these aspects. Once the audit objection is issued, and if it is a genuine objection and it is a tax payable or a wrong claim of ITC or whatever as the case may be, in case if the assessee has omitted or accepting all this, omitted to pay tax, and if he accepts and if he pays, then the matter would get settled at that level. Failing which, next further procedures to be followed out over there are going to be continued, which would be nothing but as simple as that. Once an audit objection is issued and the respective assessee offer his explanation in connection with it, if the explanations are accepted and the proposal, audit proposal or audit objection is dropped, then they would be getting concluded, or they have paid the taxes interest, then they would be concluding the audit proceedings with the help of by issuing a form GST ADT02, or it would get culminated into a formal show cause notice issued under section 73 or 74 of the CGST Act. 10 out of 7 audits we come across that one way or the other there is going to be a notice or an objection issue, because many times on a very individual note, the GST officer would be approaching with a little watertight understanding, a little approach that what is in today's law, today's perspective, today's GST portal available as a facility is as if a facility that has been available for all along, or what has been there for all that time. So coming back here, getting into some of the common audit proposals. What are the common audit proposals in connection with the departmental audit? Maybe if you ask me, it would be broadly classified into one on output tax liability related matters, 2 on input tax credit related matters, 3 on claim of input tax credits, 4 on reverse charge related, 5 on refund and other procedural issues. To start with, on output tax liability related matter. One of the common challenges that we are facing in GST departmental audit is rate of tax issues. The rate of tax, at least for the initial period, had a little frequent changes. The rate of tax, which was originally brought in, went up, went down, all these challenges was there. SSC has not concentrated on this rate related matters. SSC was into exclusive one product business, then they would be very clear in connection with the rate of tax. However, at times they were in multi-product businesses, they never concentrated on them, or it was the wrong classification from his purchaser end itself. His purchaser has charged him GST at 12%. These people have also charged to their customers GST at 12%. The purchaser from whom they purchased got notice from department and he paid a differential tax for the said invoice, which results in notice below. On the output tax liability, rate issue is one of the very serious issue. If in terms of rate of tax, if they don't have any challenges, then the next entry point would be on the output or outward supply, maybe I would call it as outward supply perspective, would be on to the exemptions. Any exemption claimed by the assessee should be in a position to demonstrate beyond doubt that they are entitled to claim the said exemption. In the case which was earlier referred by me in connection with exemption, the services provided by the company to a government authority for a service which usually used to be done by a municipality or panchayat, and it is a pure service of laying of pipe and tubes. It is out from the tax net until the latest amendment comes into effect. So we could able to establish through the contract. Precisely, we highlighted that the materials are supplied by the respective government authority. Materials are not forming part of the contract. We relied upon some of the pre-GST regime jurisprudence, more precisely on contracts like, on case laws like Bayana Builders, and emphasized that you cannot artificially incorporate, and also referred upon a very famous decision on the exemption, Dilip Kumar of the Apex Court, and said that exemption has to be read in its strict sense. No doubt, nothing can be added beyond it, and confirmed that the said exemption would be entitled. But on to the other cases where assessee was into the business of selling shrimps. On the shrimps, all they sell, but all the trims, the edible offal or the organ head part of the shrimp, all this are made as a powder, later sold to manufacturers of shrimp feed who used to manufacture shrimp feed, and the said activity of any feed grade is going to be exempt. Whereas this particular company is only selling shrimps feed powder, a powder which will be mixed in making shrimp feed. The said powder would be taxable. As simple as that. If someone come out and say it is coir pith compost salt is exempted, and somebody is selling coir pith, not the compost salt, coir pith compost salt is exempted, then the said coir pith is leviable to GST at 5%. So these are the challenges in the exemption when they say raw turmeric or fresh turmeric is exempted, which means the agricultural produce grade fresh turmeric is exempted, not the one post that is available after processing. So if any sort of exemption, be it on goods, be it on services, is availed by the respective registered person, the said area to be verified more carefully in connection, more precisely in connection with matters of important referred to in table 5 of the assessee in annual return. All the supplies which are not leviable to tax are listed in table 5 of the annual return of the assessee. There are the catch points. Is this turnover is really exempted, and the basic references of all this gains its momentum. Followed by, in case assessee is involved in certain no supply transactions such as high fee sales or sale of warehoused goods, customs warehoused goods, then the necessary documentary evidences in connection with such sales gains its more importance. It could be a high fee sale contract, or it could be various other connecting documents to establish the fact that this person, the respective assessee, is the original importer, and subsequently he has transferred those document title to goods before the goods cleared for home consumption, and these facts are brought in under a contract of IC sales. These facts also can be easily collaborated at the shipping bill, at the bill of entry level at a later point in time. All these are all gaining its importance to establish a said fact that the said turnover is not leviable to GST. Moving forward, on to the zero rated supply, a kind of outward supply. More precisely on export of goods or services without payment of tax and export of goods or services to SEZ without payment of tax. I'm not much bothered about export of goods or services with payment of tax and later part claimed as a refund either for supply to foreign country or for supplies to SEZ. But when it comes to a person who has obtained LUT and availed this said particular activity, the associated compliances has to be ensured. If it is an associate who has provided certain services to foreign country and also opted the benefit of LUT, one of the requirement as per Rule 96A is after a raising of the tax invoice for the said services, payment has to be received within a period of 1 year from the date of invoice. This point is verified at the time of audit. Whether the export of goods has happened within 3 months from the date of removal of goods from the godown or factory as per LUT. Yes, this point is also verified. Failing which, the LUT will cease to effect, will have the right to, it will get ceases with immediate effect, and until the said amount of GST on the said transaction is paid, all the benefits of LUT is not available. So one of the important condition, more precisely I foresee, is only in case of services. If they opt LUT, they should ensure that they have received the forex within the timeline prescribed, failing which it is going to be a challenge. Here, on few cases of clients, we have come across this fresh challenge for which notices, audit objection is issued, notice is issued, in fact, show cause notice is issued, we have filed reply. The matters are all like this, where assessee has exported services but failed to obtain LUT, however, exported the services, received the forex from the respective supplier to whom they have exported the services, but failed to obtain the LUT. Because their domestic turnover is in a good sizable mode, whatever ITC that small they have all got exhausted with the domestic turnover, and they are not exclusive export turnover units, so the need for refund has never raised. But during departmental audit, objection was raised that you have not obtained LUT, so you are supposed to pay the tax and claim the credit. You are supposed to pay the tax, claim the credit, pay the tax, and at a later point in time, if you want, you can claim it as refund. We have raised an objection saying that the said model won't work out to us because of a simple reason that this particular activity would be even without with this LUT document we are supposed to do. We have done the same even without an LUT document. They should permit us in doing this. But a point to be noted down, from a departmental perspective, the challenges that we have is very, they are very restrictive when it comes to it. If you don't have LUT, we will not be able to appreciate that you have exported the services without payment of tax. That too, if it is in refund cases, we are having a serious issues in connection with it. However, other than refund cases, these are all becoming a procedural challenge that need to be handled. Just give me a minute. Selva?
Yes, sir. Hello.
Selva, is my camera working? Because
Yes, your camera is visible, sir. You're visible and audible. You have stopped your video. Sorry, you have stopped the screen sharing, it seems.
Yes.
So, is there any issue, sir? No, I was listening to you. It was working.
Thank you. So, coming back here, as part of a screen sharing now not required, sir. We'll get it. As part of the export related matters, one, having a mandatory LUT is a procedural requirement, no doubt about it. It has been starting from section 16.3, it is a requirement. But without that, there are SSCs who have did their export, they have not claimed any refund, but they ensured all the compliances in connection with the GST are done. But without an LUT, they have exported these services, and it's not only applicable in the case of supplier of services, even in the case of supplier of goods. One of the very recent audit, the supplier is not has exported goods to the tune of 8.75 crores of goods to foreign country. However, though everywhere he has mentioned export of goods without payment of tax and LUT, he has not obtained a LUT at all from the system, which is one of the easiest activity. I do agree with all of you who are all virtually listening, but my intention here is it is not done by the SSC. Now, in these circumstances, asking the respective registered person to pay a complete tax on this would not be feasible. Those are the exceptional challenges in terms of rate, in terms of exemption, and in terms of certain procedural aspects in connection with outward supply under GST. Turning on into matters of concern in connection with valuation are, I'm sure all of us would agree, majority of the organization are still in the process of learning cross chart, in spite of so widely it is being propagated. A very few organizations in fact practice cross charge, where in today's business environment there is a high possibility that a head office would be providing one or two services to its own branch office, maybe supports in terms of few admin activities, or support in terms of few accounting and finance activities, or at times holding company provide certain basic setup services or basic support services to subsidiary company. These are all some of the common points in connection with group companies and all this. When all the basic information are available at the financial statement level, who are all a related person, what kind of transactions that are all done through either the tax audit report or through the GST audit report, tax audit reports, or through the statutory audit reports and those matters. In all these circumstances, a point to be noted down are, is these organization has to do a cross charge? Is these organization has to take care of it? In my view, yes, cross charge is looked out as one of the regular points in departmental audit in case if they have organization or in case if they have a multi-state GSTN registration, where it would be a corporate office located in Andhra Pradesh, and they have branch offices in Hyderabad, Bangalore, Chennai, Bombay, and let's say a very simple activity of the call center is handled centrally for all the call logs which they get where their first service call, wherever from for that particular services of the organization, whoever calls, the call is logged on to, let's say, Andhra Pradesh head office, which means naturally Andhra Pradesh head office is providing the business support services to all the other branches. In fact, organizations has to think and revisit on all this and decide upon whether cross charge is applicable, not applicable, and take positions in connection with it. One of the audit, it was a wrong position took by the departmental auditor. Close to about 18 crore rupee of demand was issued. Let me repeat it. That demand will not be sustainable based on various other valuation provisions and matters in connection with it. But my intention is only here is these are all our areas of concern in connection with the departmental audit. Similarly, left, right, center, few organizations get into this aspect of reimbursement. Does reimbursement is really allowed? When we go back, a lot of restrictions are there to conform in connection with reimbursements. A lot more restrictions are there. For example, unless and otherwise a registered person satisfy more than 8 specified conditions which are laid down under Rule 33 of CGST rules, they would be, or the said amount would be called as a reimbursement. Failing which, though it might be an actual reimbursement or actual recovery of money spent, the validity of calling the said money as reimbursement would be really challenging from the valuation perspective. Section 15(2)(c) is so widely worded. Any money collected by the supplier for anything done will be included in the value of supply. So section 15(2) is so widely worded. Keeping that in mind, in case if the organization has the habit of claiming reimbursements, then those reimbursements has to be as per this Rule 33 requirement. So in case if there is assessee whom we deal with, and if he has a reimbursement, then yes, the compliance under Rule 32 need to be verified, and these are all. And how somebody would know about reimbursement, we ourselves would have given that lead in the reconciliation statement. Those are all are available as part of various other documents, or if a trial balance is given, all those reimbursements are shown separately. So these are all the requirement, or if they have an opportunity to verify a procedural discussion, at that time they would be able to step in whether there is a reimbursement or not. Many levels are there how a data is being made available to a GST officer. But point here to be noted down are, in case of those reimbursements, if it is a real reimbursement, it should satisfy the test of Rule 33. Broadly, these are all from the outward supply perspective, common points, be it at rate of tax, be it at exemption claim, or at the valuation level, followed by certain matters in connection with eligibility of credit notes and those matters. Quickly getting into opposite area of outward supply for a taxpayer is reverse charge. No doubt, every registered person, in case is going to be a recipient of few goods or few services which are notified by central government in consultation with GST Council, may be liable to tax under reverse charge. Coming back here, as part of few services, there are RCM liabilities. One of the very common RCM liabilities are reverse charge on goods transport agency, otherwise called as transportation of goods by road, those freight related services, or services provided by an advocate, or sponsorship services, or services provided by directors, or it is going to be all those services provided in connection with ocean freight. Let me repeat. At times, organization miss out on paying taxes under reverse charge. However, officer, he scans through the GSTR 2A of the respective taxpayer, pull out invoices which are reported by his supplier that my recipient is liable to pay tax under reverse charge, consolidate all those invoices and demand taxes. At times, assessee has partly paid on few invoices, partly omitted to pay on few invoices. At times, entirely they have omitted to pay taxes on reverse charge. More precisely, in the financial year 17-18, a lot of challenge is there in terms of these reverse charge. Organization during audit definitely should take positions. What would happen to the then existed 9 subsection 4 reverse charge and 5 subsection 4 reverse charge, not the one that is after amendment on 1/2/2019. Prior to that amendment, more effectively from 1st of July 2017 to 13th of October 2017, all those services received by a registered person, all those goods purchased by a registered person from unregistered person, the registered person is liable to pay tax under reverse charge. We get no audit objections, audit para in connection with it very regularly, followed by alternate point over there is also ocean freight in case of import of goods. Ocean freight is a very common point. In spite of the disputes that are running, in spite of the apex court has stayed the matter in the case of Mohit Minerals, the matter is still on. Ocean freight reverse charge or reverse charge on freight, reverse charge on security services, reverse charge on services provided by rent-a-cab operator to a body corporate, or services provided by government to business entities. All these reverse charges, let me repeat, all these reverse charges we are having challenges. As far as reverse charge is concerned, no doubt if the organization is going to pay the tax and the reverse charge, subsequently they would be entitled to claim credit if they are going to be engaged in a outward taxable supply. Assume for a moment if an organization is going to be engaged only in outward taxable supply on its output, then naturally the entire money they are entitled to claim as reverse charge. But the challenge to the organization is there are few organizations who import goods. After importing the goods, they further process the goods and sell it in the domestic market. When they sell in the domestic market, the said goods are exempted. In those circumstances, the reverse charge, whatever tax they pay, all are going to be costs to them. In those circumstances, disputing the fact through a principle called as doctrine of revenue neutrality would be highly litigious. Otherwise, we can highlight a fact, the matter is revenue neutral, but let me repeat it, there are two schools of thoughts in connection with it. One school of thought highlights the matter is revenue neutral in nature. Another school of thought highlights you pay the taxes now and claim the credit now. Let me repeat. If we discuss the matter as matter is revenue neutral in nature, we will not be liable to pay tax. In any case, if you would have paid tax, you would be entitled for input tax credit. If all that is highlighted as part of reverse charge during the audit objections which are raised, there is another leg to it which makes no, reverse charge is a specific levy that has to be discharged, and it has to be discharged only through cash when we read through specific section. And this levy has to be paid along with interest. At a later point in time, you claim input tax credit. Then fundamentally, a person can later date question the validity of claim of input tax credit. Maybe this auditor would accept, this GST department auditor would accept and go away. A next GST departmental auditor would come out and question who asked you to claim credit during 2021 for a financial year 17-18, where section 16(4) denies claim of credit beyond a period of subsequent financial year September return filing due date. So it's going to be a tough time. Proper calls has to be taken based on the assessee, but again, case to case, a view has to be precisely taken. But one common standpoint that we come across is freight charges, advocate charges, security charges, ocean freight are common reverse charge points, paras in departmental audit. That too, the person from whom we source the services of GTA, in case if he is a registered person and if he files his return, automatically data comes and sits in the GSTR 2A of the registered person. Straight away that amount is sent as a demand to the respective assessee. Quickly getting into post issues in connection with reverse charge. On one of the important areas of departmental audit as part of verification is input tax credit. As part of input tax credit, let me honestly share, a lot of notices are issued only on non-matching of input tax credit. I leave all the learned members to their own thought process, but as the law stands today, no doubt I completely agree with you that on receipt of the said invoice and payment of tax by my supplier for the said invoice, and the said invoice is reflected into the auto-populated return of the registered person, I am entitled to claim credit. I agree for all my January 2021 credit. Does the same principle would apply from 17-18, 18-19, 19-20 also? It's a fundamental question, including 2020. It's a fundamental question, because if my memory serves me right, we had the GSTR 2A for the first time released sometime during July 2018. Until that day, we were been going on based on documents available with us, credits taken. And the credit would be belonging to financial year 17-18 and it would have been claimed during subsequent financial year, followed by reporting non-appearing of 2A 3B invoices. Whatever credit taken by the registered person is not reflected in 2A, and demands are all mind-boggling number. On an average, if assessee is involved, let's say in a turnover of 1 crore or 2 crore, something like this, of 2 crore of ITC, on an average we are getting a number of on an average we are getting a number as simple as 30 lakhs. 30 lakhs worth of credit on a tenure of 3 crores is not appearing. So a point to be noted down over here are these are all the cases on a 2A 3B. Notice on 2A 3B ITC is not appearing. Followed by in connection with apart from 2A 3B related audit paras, 2A 3B related objections, because individually assessee has to take a call in connection with their credits which they have taken. And again here a very strict school of thought comes out and highlight no, credit has to appear, other party has to pay tax, then I have to claim credit. But there are for and against principles in connection with it. Until necessary amendments are made, at least till March 20, I come from a school of thought that credit has to be taken based on documentary evidences. For non-compliances of few things by my supplier, the recipient cannot be, who claims credit, cannot be put into various challenges. So those are all the issues that we have in straightaway mismatching of invoices. Now that where there is a proposal to remove all this, we have that own set of challenges which are open in connection with input tax credit there. Apart from this, a few credits are getting disallowed based on business specific. One or two I would mention, where on the other day it was a consulting firm who sent a few employees to a particular artificial intelligence program which conducted which artificial intelligence 3-day event, a residential seminar which was conducted on a particular hotel in Kochi. The credit is being disallowed on the forefront by the respective departmental officer during the GST audit, saying that, see, they are staying in a hotel and this is for the purpose of staff and all. Personal benefit not eligible. He goes, gains knowledge, come back, implement everything in my office. Starting here, maybe a few credits in connection with business of research and development, a few credits in connection with beyond health insurance and life insurance of businesses. For example, liability insurance in case of a director is taken, should be eligible for GST credits. So a few credits are getting blocked, followed by, in case if the assessee is engaged in both taxable as well as exempted supply, the reversals. No doubt the reversal has to be as per rule section 17(2) read along with rule 42. However, when we go back and discuss, rule 42 is very meticulous, very clear what and all should form part of it and what should not form part of, or what should not be forming part of it. But unfortunately, we get notices where entire credits are taken as common credit, where the formula itself is very clear. T1, T2, T3, T4, all this should be excluded. You should arrive a common credit, and the common credit, the necessary formula need to be applied again. That's straight away given a go by. Now, my intention here are one, credit coming, as long as it is principally directly related, no questions are coming. I was still on the other day unable to get convinced myself. It was the rooftop. It's a software company, and they have taken about 3 floors in the software building, in that building, for their official purposes. There is a rooftop is covered with temporary shed sort of things, and this rooftop is actually a open rooftop for all the 9-floor owners, or 9-floor tenants. But what this software company did, this was been occupying these 3 floors, 4, 5, and 6. They have signed some certain exclusive agreement with the landlord, said a particular space of the rooftop will be exclusive for this particular software company. And the rental agreement was, it's not kind of a rental agreement, it's kind of a facility space sharing agreement was signed and given at a consideration, and they periodically collect rent. The departmental officer denied the credit in connection with this, saying that the respective space is used for employee purposes, personal purposes. I still can't understand matters of this. I don't think so. The dispute in connection with input tax credit will get resolved very quickly. But organization has to establish beyond a doubt that these expenses are in relation to furtherance of business, and it is used in the course or in relation to business, then yes, they should be entitled to claim credit. A few credits in connection with employee staff quarters, or a few credits in connection with their township, in case if they have a township related facility, or a few services in connection with research and development, or on purchase of goods, in case if there is going to be abnormal loss, or even as part of their business there's going to be some kind of manufacturing losses as part of manufacturing regular loss, then those are all should be into the consideration while few decisions in connection with all this are taken. These are all the common areas where credits get denied, apart from any gift, as part of business promotion activities. If any credits are taken by the organization, all these are all denied. But sometimes these credits are all with little minimal in nature. Organizations also does not much bother about it unless it reaches a very substantial level. Quickly getting into the last phase of the common observations of GST departmental audit in terms of refund applications are filed, processed periodically, and refunds are granted. Post granting of refund, on the refund which is already granted and given to the respective organizations, a few questions are raised. To start with, on a refund application made by a supplier to SEZ, a fundamental question was raised asking them kindly submit the acknowledgement in connection with that you have supplied goods to SEZ. Basically, that is one of the document which need to be supplied by the respective person who has supplied the goods to the SEZ as part of confirmation that the respective supplier has supplied the goods to the SEZ. He has not collected taxes from the SEZ, and now however he has paid taxes, he is entitled for refund. Starting there, those documentations are verified, and a few transactions they are unable to share those documents or confirmation from their SEZ. A very precise procurement, DTA procurement acknowledgement from the SEZ, for which refund is supposed to be rejected. Initially, when the concept of refund was on a more or less semi-online mode, preferably on the financial year 17-18 and mid of 18 till, on those modes, there are few organizations who exported the goods and claimed refund for the goods exported, which was a practice under the erstwhile VAT regime in few states. If we export the goods, what goods we have exported, that related ITC we would be entitled to claim. In fact, that is not the model when it comes to GST. The GST goes by a very specific model. What is the adjusted total turnover? What is the net ITC? What is the export turnover? So export turnover divided by adjusted total turnover into net ITC. They are entitled for refund, but the refund was granted. It was a wrong claim by the assessee, no doubt about it. A wrong claim by the assessee. Assessee has exported, let's say he is doing business of cameras. He has exported 100 cameras. Exactly on which 100 camera he exported, you will be able to evidence from one to one from his stock record. He has claimed refund exactly on that 100 cameras. But actually, he should have claimed refund based on net ITC into export turnover by total turnover. If in that way, if it is done, the refund granted would be little less as compared to what was originally granted. A difference of 6 lakh rupees is arising. Refunds are points. Similarly, prior to a complete online mode, prior to change in the annexure B, where the HSN details are sought by the department, a few organizations on the inverted duty turnover or inverted tax turnover, they have made application for refund and claimed ITC even on input services and capital. At least in a case where we had the opportunity to see, they have claimed credit on capital, because at the time of before department audit, when we scrutinize, we would be scrutinizing on all these angles. When we scrutinize on this angle, we would be able to justify, no, your ITC is only so much on goods, your purchase is so much. Now, how come you get a number of this? When we go back and verify, we could able to establish, yes, there is a ITC. Now, this ITC was again denied by the government. So at the time of refund, it was not looked into by the officer. Of course, we have highlighted that penalty should not be applicable. It was erroneous at the time of filing. These points gains its moment. So coming back here, be it from outward supply, a few standard paras we have. Be it from reverse charge, we have a few standard paras. Be it from input tax credit, a few paras are there: blocked credit, ineligible credit, or credits which is not having nexus with business directly, or it is going to be a non-procedural compliance such as 2A, 3B not matching, the other party has gone away, he has not reported tax, all that stuff not matching basically. All this followed by refund. These are the broader observations under GST departmental audit. Apart from business specific observations that they make, 5-6 paras would be among whatever we have discussed. Maybe they would have enjoyed an exemption. That exemption might, validity of the said exemption might be questioned, or they would have done an export of goods or services a procedural lapse on that would have been questioned from the procedural perspective. A few RCM would have been not intentionally evaded, unintentionally it was missed out at the time of filing. So these are all part and parcel of the regular audit observation in departmental audit, but for the exceptional situations, there would be a situation that there is a delay in payment of taxes at the time of filing 3B. Usually, when annual compliances are done, the necessary interest are discharged. In case if they fail to discharge the necessary interest on the delay in payment of tax, yes, those are all gets demanded here. The best is late fee for GSTR 1, 9 and 9C also. Late fee for 1, okay, to some extent I can understand because it is getting exempted until only a particular date. After that, it is not getting exempted. But late fee for 9 also okay, which is as per the law allows. 9C and all, as per law itself, there is no late fee, but we get a few audit objections saying that your late fee for 9C is also so much. For 9C, there is no specific late fee, but for the current year onwards, yes, there would be, but until earlier year when section 35(5) mandatory audit was there by either a chartered accountant or by a cost accountant, until such time there is no specific late fee associated with GST filing of GSTR 9C. So, but for the regular aspects, areas like this, plus again here also, until 1 year before, we have been having challenges that interest should be calculated only on gross tax liability. From last year onwards, we have that clarity, little abundantly sound and clear, that interest to be calculated only on net tax liability. Again, yet another dispute that was very seriously going on was credit on wrong claim of credit. Are we liable to pay interest, for which we also have the position settled at least now through the finance bill, that if the credit is availed and utilized, then interest would be applicable at the rate of 18%. Otherwise, it would not be applicable at the rate of 18%. All these are all common observations that we have come across as part of all the GST departmental audit. Quickly getting into the next leg, post GST departmental audit. If I agree to those audit objections, yes, a tax would be discharged through DRC 03 and a form ADT 02 would be given. If I raise my objections to those audit paras and say it would not be accepted, the conclusion would be issuance of a show cause notice under section 73 or 74, and then a regular proceeding will be created. And it's a usual threat from some of the learned officers that if you don't pay, there would be a penalty of 100%. You should mandatorily pay 15% penalty, 25% penalty, all that stuff. In our humble view, from the GST perspective, unless and otherwise it is not a very serious fraud intention to evade and all is there, penalty will not be sustainable. New law, budding law, has its own set of challenges associated with it. So someone cannot very highly press upon that all this becomes mandatory. Quickly getting into yet another type of audit which has been there is section 66 audit. Basically a special audit. As far as this audit is concerned, it would not be applicable to all assessee. It is applicable only to selected assessee. Any person not below the rank of assistant commissioner with the prior approval of the Commissioner of GST, will appoint a chartered accountant or a cost accountant to conduct a special audit under Section 66, where department is of a view that in case of a particular assessee, his valuation is little doubtful. In case of a particular assessee, the claim of ITC is doubtful. In those circumstances, a special audit would be invoked. Only in circumstances where the department is of a view that they have some issues in valuation, they have some issues in claim of input tax credit. Yes. Post conducting the audit, the chartered accountant or cost accountant has to submit his report within 90 days from the date of commencement of audit. Of course, after the reporting by the cost accountant or chartered accountant, an opportunity of being heard will be given to the registered person to discuss about the findings of this special. It's out and out a special audit, where usually in that business everybody would claim only 65% of input tax credit, otherwise very popularly called as cash to tax, ITC to tax ratio. 65% they will pay through ITC and balance 35% would be paid through cash, when that is the norm for the whole industry. One particular registered person alone claims 98% ITC. When department has a doubt on the valuation of a particular product supplied by a person, not only to a third party but also to a related person, then in those special circumstances alone, this special audit will be invoked, of course with the prior approval of the Commissioner of GST. The remuneration to the said audit would be paid by the Commissioner. The materials, documents, reports gathered on account of special audit would be used against the registered person to explain the said issue. If in case, if that results in a short payment of tax or a non-payment of tax, then a show cause notice will be issued under section 73 or 74. I have never come across as of now a special audit is initiated on any of the registered person. What we have very regularly have come across is a departmental audit under section 65, very common audit, and there are standard points in connection with it. ITC, RCM, outward supply, refund, procedural matters. Why you have reported this, why you have not reported this, why you have issued a credit. One of the very recent issue where we are fighting is on, it was during 2017, one of the assessee has availed ITC. While availing ITC, erroneously mentioned in the IGST column the purchase value of the goods. Let me brief one line about the assessee. Assessee is into trading business for the last 30 years. He buys, sell, he buys, sell, he buys, sell, he buys, sell. He saw TN GST in Tamil Nadu. He saw TN VAT in Tamil Nadu. For him, what he knows, or for his accountant, what they know is, on the sales, we will mention value of sales, tax. On the purchase, we will mention value of purchase and tax. He thought the first column, IGST column, is nothing but a value column and mentioned the value of material. Let's say 1 crore rupee. 1 crore rupee he mentioned in the IGST column, CGST 9 lakhs, SGST 9 lakhs, claim the credit, use the credit, only CGST, SGST. This IGST credit is as it is maintained. Nothing has happened. That was standing as it is for more than 8 months. Suddenly during audit, one of the audit person asked why this credit is hanging internally, not departmental audit, on internally during assessee finalization audit, statutory audit. No, we don't know what is this. Then when they analyzed and zeroed in that this is a wrong claim of credit. Reversed by the assessee, voluntarily reversed, not used at all. They were slapped with notices for interest and penalty, all summing up to 28 lakhs, which is not withstand. We have a very recent amendment. But somebody has to undergo all this. They have to give a proper reply at the audit objection. Whenever at times department person see the foreign currency expenditure, they conclude it is an import of service. There's a world of difference between foreign currency expenditure and import of service. Import of service is a positive act of something. Foreign currency expenditure, my employee went to foreign country and spent a few bucks there, and then he comes back for an account of conference, for an account of a business deal, for an account of XYZ reasons. But the point to be noted down here is import, not all forex currency expenditure reported are import of service, but all import of services are foreign currency expenditure. There is an underlying difference. I pay a commission to an intermediary who is located outside India, not an import of service. I'm not liable to pay tax. Unfortunately, a few organizations paid for that. Why headache? Let's pay and claim credit. The credit is now under question. So coming back here, again and again when we go, the issues are drilling down only into on either a procedural matter or at the forefront of law of understanding of it. And with today's learning, we approach 3 years before a transaction. I think that thought process has to undergo a change somewhere. Any case, it will be changed over a period of time, and matter has to be taken up at somewhere. Somewhere it has to be informed that not all foreign currency expenditure are import of service. Import of service is something different. You should go by various other provisions, including the provisions such as place of service. We have certain challenges in connection with it. Yet another procedural challenge which we faced on one more assessee, which is before we wind up this, let me highlight on this aspect. It was amendment related issue. A tax invoice was issued by a registered person. However, post uploading the data, once everything is done, they understood that erroneously the GSTR1 was filed. In other words, A company data was uploaded in B company data was uploaded in A company. There was a clean interest change. Very simply, all of us can say, no, this should be done with little more carefulness. Correct, but it was an error committed by the company because the said accountant handles both the company. He is the common accountant for both the company. He handles all. But again, while uploading, he missed. Now this came up at that time. No amendments possible. What we did is cancelled all the invoices through a credit note. A credit note was issued, and all the invoices issued was cancelled. Very simply, next month, all those invoices was correct invoices was reported. Wrong invoices are all lost. All wrong invoices were cancelled through a credit note. Today, department is not allowing those credit notes. Now you should have made amendment. Why you are cancelling it? amendment facility itself came sometime during October 2018 and afterwards. My problem is a problem of September 17. So how I can make amendment? These are all procedural issues where departmental audit highlights lot, brings us lot where we stand, where the organization stand in terms of the complaints, in terms of the regulatory requirement. But sometimes a few questions are not directly acceptable. These are all a few thoughts of mine in connection with departmental audit, a common observations during various departmental audit. What are the precautions that need to be taken by us before submitting documents, reviewing those documents, thinking from all these points, whatever I have shared, all could be of little importance to us before when we take up. I thank the organizers and thank you all for an effective and patient listening. Subject to time availability, I'll be taking up some questions. Over to you,
Sir,
Silva.
Sir, we have 2 to 3 questions. So is my screen visible?
Yes, sir. Yes.
Thank you.
A client is in the business of export of service. We were not aware of RAN 1 form and LUT at the time of migration from service tax to GST. Only from 1920, client has submitted LUT. In the year 2018, after expiry of RAN 1 due date, they took service tax credit as CGST input in 3B, but did not notify this aspect to department. The input tax credit is still lying unutilized. Last week, they received a notice for audit of 3 financial years. What position for question 1 and question 2 above? Question 1, the assessee has not taken LUT for financial year 17, 18, 18, 19, and I understand from 1920 they have LUT. As long as they have received forex, it should not be a problem, and if they have not claimed the refund, then there is absolutely no challenge I foresee. It's only a procedural non-compliance with a particular procedure. If I do, I am out, I'm not liable to pay GST. Without that procedural document, what I do, that should also be out from the GST is my contention. When it comes to the second query in connection with TRAN 1 due date, as far as TRAN 1 due date is concerned, a transactional credit is the credit which need to be obtained only through transactional forms. However, you have very clearly highlighted they were not aware of the said fact. Maybe my only submission is this fact should have been intimated to the department at that point in time. Now it is little late. There I am of a view that should not be done. And in the query, the querist is also very clear that credit is still lying unutilized because they have their own set of doubts. Can we use it? We will not use it. Connecting along with the above question, being an export organization, okay. So if they have not utilized, maybe they can reverse it and interest liability should not be applicable. However, department would say no, interest would be applicable. That would be a little fight associated with it. But credit eligibility, I have my own doubts because if it is on account of some procedural issues, they should have approached the department in connection with those aspects. Because in those circumstances, or approached through a writ court, in those circumstances, all the writ courts, everyone gave a direction that you go and claim the credit in this model. So that would be the reply in connection with query number 1. Getting into query number 2. If there are some entries in GSTR2A, but when the client is not made any purchases from such person, what is the obligation of the client in case to avoid audit objection, if any? The moment it is not the respective client's purchase, then they would have naturally not availed input tax credit and they don't have any challenges in connection with all this. Let me give absolutely no challenge the respective recipient has. It is as simple as that. Few cases we have come across. Instead of O, while data entry, it is mentioned as 0. So keep on, the respective recipient will be 0. For him, it is coming. Actually, this itself is a little rare GST data entry error, or it will be a mismatch. Somebody else credit it should go, it is appearing to us as a recipient. If they have not availed the credit, nothing. If they have availed the credit only, there would be challenges. Otherwise, there would be no challenges at all. Vehicle showroom receives commission for using the showroom premises for their business. Sales tax notices were received by the showroom. Is it liable or liable by finance companies under reverse charge? Let me repeat. Vehicle showroom receive commission for using the showroom premises. I mean, I understand in this way. If I understand the query, instead of vehicle showrooms will have all those finance persons available in the showroom, and those finance company persons who are all available in the showroom, those people would be assisting the other people in connection with all those purchase, or in connection with loan processing, all those stuff, all those related in connection with loans processing, for which the respective showroom would be entitled for allowance. If the showroom is run by an individual and an individual is getting registered himself as a direct selling agent to the banking company, then the respective commission will be covered under reverse charge, and the respective finance company will pay tax under reverse charge. In case if it is a company or a partnership firm or an LLP, then the said reverse charge is not applicable. Under a forward charge, the respective vehicle showroom is liable to pay tax. So the status of the vehicle showroom decides the liability in connection with commission received on account of all this financial arrangement matters, or for ensuring processing the loan related matters. For those purposes, whatever commission they get, that liability is getting fixed. Do we have questions, Silva? Okay. If we get audit notice with GSTR 2A versus Form 3B, difference asking to explain or pay the difference between them for 1819, but only summary details of 2A adopted by the department is provided. What should be the approach? My only recommendation in connection with 2A versus 3B is first accept the notice, acknowledge the notice, no doubt, and question based on what data comparison you have arrived, because this problem of 2A versus 3B is at a very macro level they are comparing, and for which period it is being highlighted. For example, financial year 18-19, 2A versus 3B we are doing. In table 8 of annual return, we saw this difference. Because of that, we are demanding. Based on that, demand cannot sustain. A clean process is required. Whatever credit taken in 3B are based out of valid payment, valid invoices, condition, compliances, everything done. For a non-payment of tax by the recipient, by the supplier, for the non-reporting of invoices by the supplier, the assessee being a recipient should not be put into various challenges. However, different views of different experts are available. A few experts are of a view, no. The law makes a condition and a restriction only after receipt and reporting of those transactions you are entitled to claim credit. Prior to that, you are not entitled to claim credit. I am of a view that all restriction, condition, everything would go good in a very good way, effective from 1/1/21. Prior to that, it will have its own set of challenges. We have to explain, we have to zero down, we have to reconcile what is the reason or what is the difference between 2A versus 3B, based out of what we have to do a reconciliation and submit, and later on contest the matter, because I am, as I highlighted, I am not agreeable to the fact that I should be responsible for somebody's non-compliance, where irrespective of me making payment to him regularly, procuring goods legally from him, sourcing through legal channels, paying him periodically, if I'm going to be put into various difficult situation, I think that should not be the intention of the lawmaker, and this is something expecting beyond from what I'm supposed to comply. Reimbursement of expenses received from supplier by milk distributor towards cold room maintenance, is it liable for GST? He should be a milk distributor and he has a cold room maintenance. Milk is an exempted product. Supply of milk should be exempted, no doubt, irrespective of any type of milk except UHT milk. But I am unable to appreciate the fact how a cold room maintenance, which is basically a service provided by a milk distributor or an aggregator of a milk from local model or whatever be it, to be considered as a reimbursement of expenses. This is more of a service provided by that person, or it should form part of composite supply if he is supplying milk. So I am not agreeable to this fact that reimbursement of expenses is out from it. It is liable to GST. Yes. If a restaurant business is paying tax 5% without ITC but registered under regular taxpayer, do they need to change the registration to composition dealer? No, they no need to register to composition dealer. They can continue to pay tax at 5% for all the restaurants except a specified restaurant. Almost tax is at 5%. They can collect if they supply through regular. If they supply through e-commerce mode, after the recent amendment, the respective e-commerce operator would be liable to pay tax. Client received show cause notice from department for the year 18-19 due to difference value on outward supply between 1 and 3B. On the return, there is difference value is due to amendment of B2C value and B2B. And client filed GSTR9 as per books of account, which matches with the 3B. Let me repeat, this is all cases of explanation required. One of the challenge in the GST return is, if we make an amendment, the entire value will come and appear once again. If I am amending 1 lakh into 10,000, I have originally marked it as 1 lakh and then I'm marking it as 10,000. Then technically I should get a negative number 90,000. I would not get a negative number 90,000. I'll get once again 10,000. So this is a problem in a procedural aspect. This aspect has to be explained that these are all the invoices originally issued. These are all the amended invoices. Original, my invoice was 1 lakh rupee or 10 lakh rupee. That we have reduced or
Do you want
Silva?
this to be? No, I just stopped the screen. 1 minute.
Okay.
Do you want to be displayed?
So coming back, let's for a moment take up with an example. There is going to be 10 lakh rupee worth of invoices that are issued. Later, 2 lakh rupee worth of invoices gets amended, which means their net taxable value is only 8 lakh. And as per books of account, 8 lakhs will be there. It will also match. But however, when we go back to independent GST R1 and 3B, it would all say 10 lakh rupee and 2 lakh rupee adjustments, all independently available. So inner points here to appreciate it, it has to be linked and we have to explain the said fact. A mere issuance of show cause notice on account of all this and proving the difference will not be sustainable when GSTR 9 is as per books of account, which is also in matches with 3B. It should go well and there should not be any challenges once it is properly represented. So that would be the reply in connection with query number 7.
Those were the questions. Over to answer to follow up.
Good evening, sir. Ganesh, sir.
Sir, good
Ganesh,
evening.
Prabhu, sir. How are you, sir? Fine. Good evening, members. I am here in my capacity as Vice Chairman now in the new team. I'm pleased to inform you that the 17th of this month, a new team of office bearers took over with Chinnamastan Thalakaila as Chairman of SIRC and Naresh Chandra Gilli as Secretary and me as Vice Chairman and Mr. Sundarajan as Treasurer. And both the Secretary and Chairman are traveling today, so I am forced to be here to play their role. I'm very happy to be a part of this program, having done taken this responsibility for 1 full year as Secretary. With this, I am concluding this 2 days refresher course on GST, which was for 5 hours taken by Shankar Narayanan sir yesterday on GST precaution pointers, and today departmental audit, legal and practical aspects by the one and only Ganesh Prabhu sir. So we are indebted to both of you, sir. Really, you are the real pillars of the institute because you are the knowledge building sources for the members. So I, on behalf of SIRC and by the team of the office bearers, wholeheartedly thank you for your time and efforts in making this webinar for the day. And we keep in touch with you for various issues on GST. And your continued support is always there for us. And thank you for that. And also, I thank in absentia Shankar Narayanan sir also. And I thank each one of you members, but for your participation, these programs would not be possible. And because of your participation only, last year, that is 21-22, SIRC took the best region award because of the number of programs and useful programs and innovative programs that were made during that period and under the leadership of Mr. Janpati. But for your participation, so many programs would not have been possible. So I thank from the bottom of my heart all the members for your cooperation in participating in these webinars. Keep supporting us, and maybe in the near future we may switch on to hybrid mode of these webinars, wherein one place the physical program will be conducted and the same will be telecast. Both you can physically attend or attend online also. This is our plan in the coming year. We will let you know about these things. So thank you very much each one of you for participating, and also I thank Mr. Selva for giving the technical support, and in absentia, the chairman and secretary of SIRC for coining this program, and also back office of SIRC for all the support they have given. Thank you one and all, and we close for the day. Thank you, sir.